welcome everyone, and thank you, Nadia, thank you, Eric, for giving me the opportunity to share some of my knowledge, inside stories. Been in this industry for quite a while already, but we'll touch upon that in a second. So today, Nadia said we're going to talk about lead generation, but then let's call it the advanced, if you want to call it. So advanced lead generation. There's been a lot of talk and a lot of publications, a lot of writings on the subject, but let's get down to the nitty gritty, guys, because as Eric says, I couldn't agree more, especially in this industry. I mean, we're all in B2B and we're in a niche of a niche of a niche, if you want to call it that way. Other than, say, our counterparts in B2C, where, we all know marketing's driving the business. Here we still have to, fight for our seat at the table at any level. So I hopefully by the end of this call, I'll give you the tools, ingredients that you can use in your day-to-day job, best practices, things to look out for, things to put in place. So that's really my goal for today. Any questions, Nadia said, just say them up, put them in the chat. Don't know how you guys do this normally, but I think we'll cover those in the end. So let's get started then. Today, I'm going to start with a very, very difficult question for all of you guys. And it's really about what I think is one of my favorite subjects. Otherwise, I wouldn't start with this. Obviously, is the most important number in marketing. And when I mention in marketing, I mean B2B marketing. And I can ask you for all these for the input, but the number is, and keep this number in mind, the number is 5. So the number of today, if you want to call it that way, is 5, and we'll get back to that in a second, because this is going to be the leading subject or leading item for today's call. Now, let me quickly go back to myself and my company. So my name is Ernst. I am one of the co-founders of RedSnap. So we're a sales and marketing agency dedicated to fintech. We were founded almost 10 years ago, 2025, very deeply rooted in financial technology. Myself from a marketing and from a digital angle, and my co-founder Brian very much deeply from a sales angle. And it's something we noticed, fintech, where we worked at the time. So we had the assignment for growth. What are we going to do? So we developed all these ideas and these practices to grow that business and to get these banks on board and to get all these corporates on board and make sure that we're driving growth. So from that, actually, our company started. So we are based, Eric, to answer your question, we are based in a very small country, the Netherlands, and within that very small country, we are literally based in what's called by far the smallest city in the Netherlands, right? It's just outside of Amsterdam. And it's sometimes called Tiny Amsterdam because it looks exactly the same. Everything, we have canals, only thing, it's shrunk down to miniature size. So that's where we're based. And even from this, might for you guys be an odd location, but we serve B2B fintech vendors with global footprints. And we've done so, like I said, for almost 10 years. All right, let's get back to the number of today. And the number is number 5. So another question, and that's something that came up from research from the B2B Institute a few years ago. They did research on how marketers think marketing works. And the results are surprising, if you want to call it that way. So, because what if I tell you, B2B marketers, like probably not you guys, but the other guys in B2B marketing have a bit of an inaccurate understanding, if you want to call it that way, how marketing works. And as a result of that misunderstanding, many B2B marketers tend to set themselves up for disappointment. So how do they think marketing works? Something called the 5-95 rule. And what does that mean? So from this research, it came up that about 95% of the people that were interviewed, that were researched, have this understanding of this idea that, when they launch an initiative, be it a campaign or be it any kind of initiative that they launch, that they see within, first few weeks of their launch an initiative, they launch something on their lead generation efforts, that effort that they do, that campaign that they launch directly translates magically into sales, right? So let's really, trying from, we're turning lead into gold in an instant. That's the idea. That's the 5-95 rule, if you want to call it that. Now, not surprisingly, how do we know, and not think, but empirically know how marketing actually works? It's the exact opposite way. And what we mean with the exact opposite way, the exact opposite way means what we call it the 95-5 rule. Now, I'm not sure if you know about this. This is a theory that's been launched together, like I mentioned before, on the B2B Institute from LinkedIn, together with the Ehrenberg Bass, a very well-known marketing research institute over in Australia. And what did they find out from the research that they did is that at any given quarter, only 5% of your target buyers are actually in market, right? And think about that for a minute. So all these people that you want to sell to, all these people, all your research that you've done, we got, I don't know, hundreds, thousands of companies that we can sell to, only 5% is actually in market to buy something. Now, the implications of this are fairly big. And something really, from a lead generation perspective, or, actually driving sales, and to Eric's point, the goal we want to achieve to get a bigger or a broader seat at the table is that realization. So with all of us, all our competitors, everyone we talk to on a daily basis, only 5% is actually out there to buy something. And it does make sense because from a fintech point of view, say you're talking to this head of payments and he comes up on your radar, but you find out that they just bought or they just acquired a payment solution last week. These people are not going to buy from you this week, tomorrow, not even next week, probably not even next quarter. So they're part of the 95%. So, and what 95% that are not in market right now. So really something to wrap your head around, because what we see oftentimes at companies is they focus on that 5%. So like I said, so you're focusing on that 5% that's actually in market, very logical reaction if you ask me, because you want to sell to these people. But your competitors, everyone out there is going after the same fish. And what they tend to do is develop tunnel vision on that 5%. And that means that you forget the other 95%. They're going to come in market today, tomorrow, or afterwards. So in other words, if you wait until the other guys come in market, it's already too late. So what you need to do in this case is to prime the market out there in advance. If you want to grow your brand, you need to build up that visibility. Something's called mental availability with the people who are not yet in market. And I know still it sounds paradoxical, but this is empirically proven that this is the way people in the markets actually operate. Just to illustrate the point a little bit further, if you do focus on that 5% only that's in market, chances are that your revenue or your incremental sales picture will look something like this. And what does this picture tell you is that by chasing that very small group that is much more inclined to purchase on a fairly short time frame, you forget the other ones. And so what you do is forget everyone that's out there and actually have very incremental bits of sales. So and it also means that you lose out on a very big chunk of the market. So in other words, you go in, with all your marketing activities, you score well, you're doing good, and then you get out of market. Why? Because you're not chasing the other 95%. So you keep chasing, in fact, your own tail with this, right? And you see the effect on your incremental sales. So you're wasting valuable time, you're wasting valuable effort, you're wasting valuable resources, right? By just going after that 5% that's in the market right now. Now, what happens if you combine those efforts, right? So, we're building that visibility, we're staying top of mind with the people that are not yet buying from us today, but tomorrow, day afterwards, etc. Like I said, it becomes easier. Why? Because people know you, right? This is what you're building. So you're building that growth from sales activation and continuous visibility. Also, in other industries, visibility building is called branding. But I clearly want to stay away from that bit for now, but we call it building visibility, right? So with the two working in tandem over time, right, you're really building up that picture and knowledge in the market. So, these potential clients, they get to know you, right? So they trust you and they're aware of your propositions and especially your differentiated value. Another super important topic, by the way, but not for today. So when they do come in market, they are familiar with you guys. They're familiar with your propositions, what you have to offer, and you're top of mind. So you're on the short list a lot quicker than you are without focusing on that group. So keep this in mind. This is going to be very key for the rest of the talk today. The number is 5, and that means focusing on the total group. Only 5% of your total addressable market is actually in market and ready to buy from you guys. Here's another one. So it's a quick statement. I think so. Did anyone ever buy a new payment solution, for example, from a single cold email? And the reason I use this quote, I don't know about you guys, but I get bombarded with emails every day saying, okay, do you need more leads? Do you want more contacts? Do you want more of this? You want more of that? You want more of that? I never actually answer one of those. And you probably realize this. You probably recognize this as well. And what this actually means is that so from a B2B buying perspective, journeys have a ton of touch points, right? So the buying journey that your customers probably go through is what we call fundamentally non-predictable. As much as we love it to be, and you want people to go from A to B to C, really down the classical funnel, even the picture that I showed you above, but reality is wildly different. And you probably know this from your own experience. And if you go out to look for anything that you want to purchase, even if it's a toothbrush, it might be a bad example, but I don't know, piece of clothing, whatever it is you want, you go look, you go out there and you start comparing. Well, in B2B or the B2B buying journey is pretty much the same. You go talk to peers, you go do your research, you go to the web, you go to events, you go to all these different touch points, and you go to this really wildly almost chaotic journey to reach at the end. And in the end, you end up at a company like yours, a company like your competitions. But this is something also to keep in mind. And the more tools, channels are out there, the more unpredictable it gets. So this is something that you really have to keep in mind. People don't follow the pathways or strict journeys that you might create, right? They choose their own way. They talk to everyone. They go across from social to events, back, forth, left, right, talk to each other. You probably don't even know about this. So to make matters worse, right? So there's this. People do a lot of research and they reach out to vendors. Probably it's like around 90% of the way, on their buying journey. So a lot of things happen below the radar that you might not even see. If you're not listening to these signals, if you're not scoping out what's going on, if you're not capturing this, chances are that you're coming into the market too late, or they go to your competitors. So that's another thing really to keep in mind. So given all of this, right? So there's two very fundamental questions then that we need to answer from a revenue lead generation perspective. And that's one, how do we make sure that we figure out what the 5% is that is in market, right? From a revenue perspective, fairly important. And B, how then do we remain on the radar of the next 5% that comes in market, and the next, and the 5% after that, and the 5% after that, and the 5% after those 5%. So very key questions. And remember this picture, when we start answering this, is that it's not just marketing, it's not just sales, it's the two worlds hand in hand, the two worlds in tandem, working together to play that market and then make sure that the visibility is up consistently, right? And the sales get activated at the right time, at the right moment. Okay. Three things. In order to answer those questions, actually three things that we need to start putting in place and really need to work with. And that's one, something that's called scoring or lead scoring. I'm not sure if you guys are familiar with these terms or if you're already using it or not, but lead scoring or contact scoring is really a way to figure out what we call fit and interest. So when we talk to companies, especially on engaging with companies digitally from a lead generation or a marketing perspective, you have companies coming into whatever CRM system, marketing automation platform you have. From all your activities, you talk to at events, you do outreach, people convert, so they become contacts. Now, first thing we need to find out, is this company that we're talking to, is it a fit? Is this part of our target audience? Is this a company that could potentially buy from us? Is it the right location? Or, are they in the right industry, etc.? So that's one. So really, really on a company level. And then there's interest, right? So on the x-axis. Super important. So we have an idea about fit of a certain company that we're interacting with, that we're engaging with, and then we move to a person or a person that's behind those companies. And what are they doing at that moment? So this is about interest. So this is, who are these people? So I try to get a sense or an idea of who they are. It's like in what we call a buying committee or in a purchasing team. Who are they and what are they doing with my content, my channels? How are they interacting? So we need to have a gauge for this as well. So all in all, this results normally in a number that grows and shrinks over time, but it gives us an idea and actions that we want to do. Now, 4 quadrants, and I briefly go through them. So if somebody comes on your radar that is a low fit, so it's not a company you're interested in, you probably won't sell to them, and they're actually not interacting or doing anything with your content, your messaging, your emails, whatever it is you want to do on the channel perspective, then my idea is, okay, leave them. These are companies to avoid. Maybe there's students doing research, but it could be anything. It could be competitors, it could be anything. So now, and this is an interesting one as well. So, and this is something that we hear from experience, that we hear quite a lot. So we have a company popping up on our radar, on our scope, on our digital platforms, that is a low fit. So you would think, okay, these guys are not really working with us, not interested, etc. But they are very active across our channels, right? So they're opening emails, they're clicking, they're downloading, they're reading white papers, blogs, liking or engaging on social, might even be speaking to an event. So there's high interest, right? So it gives us an idea, these people are interacting with us. It's good, it's a positive sign, if you want to call it that way, but the fit is low. So this is what we call explore. And why we do explore, because these could be consulting companies, maybe people from press. So some people you want to keep an eye on. So they could be consulting companies hired by potential buyers to do research for specific solutions, especially in B2B. This happens quite often. So something to keep in mind of. So the fit might be low, the interest, what they do, and the people that are interacting with us might be fairly high. So an important gauge, something that should keep you alert. Now, there's another thing. So here comes a company on our scope, or we're interacting with a company that's a high fit, but they're slowly starting to engage with us. So this could be a sign that they're starting to move in market. So in this case, they're part of the 95% still, because we don't really know. We don't really have the signals or the market signals yet. No, but they could be coming into market. So this is something that we need to start stimulate interest. So something called lead nurturing, and we get into that in a minute. So we have to stimulate them, right? So this is about outreach. It's about sharing content that's that's personal, that's relevant to them. So really, make sure that we can really gauge what they're doing and see, okay, are they in market? Are they not? Are they part of the 95%? Are they moving anywhere? So what are they doing in order to make them move up to the top right quadrant? So there's a high fit and there's a lot of interest from the right people, and we see a lot of activity from a certain company. This is a signal, okay, these people are moving from the 95% over to the 5% end of things, and they might be coming in market. So an exercise that you could do around lead scoring will give you an idea, and you can run this, for example, there's plenty of tools out there to use this on your current database. So how valuable is my database? So that's one. But also, going forward, when you start building a digital model, and we get to that in a minute, this is something that is dynamic, right? This moves over time, and this becomes one of your in-market indicators, if you want to call it. Those scores could be negative. People could come and actually go. Right? People could have a touch, with any of your content, any of your items that you put out there, and they could go away. It could become negative. It could become positive, and you can use this literally lead scoring across all touch points. It can be online. You can import data from offline. Event data is really a super helpful tool to make sure, okay, am I doing the right things for the right people at the right time? Because, like I said, this moves up and down over time and becomes one of your key in-market indicators. So having said that, number one, lead scoring. determining fit versus and then combined with interest to give an idea of the companies that we're engaging with. Where are they? Are they going to move in market, or are they still out of market? Then ideal customer profiles. Again, I'm not sure if this is a tool that you guys are using, but something that we use on a daily basis. And why? Because if I want to know, say, the value of a score of a certain company, certain person, certain contact in my database, I want to know, okay, where do these people fit in my, say, ideal picture of companies that I'd like to work with? So what we call ICP, or ideal customer profile, one of the tools people use a lot. So this is really as a group of your ideal customers, customers you dream of, customers that fit your proposition best. And the best way to do this is to create what we call buckets or tiers, or a set of attributes around the people that you'd like, you could best market and sell to, right? So when determining these profiles, you can think of location, size, industry, problems that they have that you can solve easily, their vision and how well it matches with yours, their strategy, and you could even go down to technographic, especially in the B2B space, what we are, certain technical or certain technological setups that they have in place will give you a good indicator if that's a good match with what you have to offer, and you can match those. So, and what we say, ideally, put it in 3 buckets. So, tier 1, tier 2, tier 3, a matching of these companies. And why is this? Back to the lead scoring. And we know if one of these ideal customers, or one of that's close to the ideal customer, comes somehow in our ecosystem or in our space, it's a head up for marketing and sales. Like, hey, these guys are coming. These guys are coming in. The score is going to go up. Remember, from the lead scoring point of view, it's a head up. It's a heads up. So it could be a really good fit, or it could be a non-fit, obviously. But this is something to give you a better idea to improve not only your targeting, but also improve your generation towards leads. And when leads, it's also really about the marketing and sales, especially sales qualified leads, if you go down the journey. So that's tool number 2, next to the scoring, is make sure you have a very good picture and a very good idea and a very good description of your ideal customers. And like I said, ideally into 3 buckets, because it gives you a little bit more tools to put people where you want to put them, and also towards sales. So that's tool number 2. Tool number 3, and super important one, and maybe the most important one, and I'm talking about buyer personas. Now, remember the picture from above. These people are moving across all these different touch points, in digital and non-digital touch points, all the time, and they probably work together on a team. So it has grown over time. Back in the day, the average, I think it was somewhere around 3-4 people in a buying committee, right? So these are the people that actually decide on a purchase, right? So have different roles in a purchasing cycle over time. That has grown nowadays to somewhere between 8 and 10, obviously depend on who you're buying, who you're selling to. If you're selling into big banks, it's be a little bigger. If you're selling, for example, into smaller merchants, it will be a bit smaller, but the roles along the buying cycle won't change very much. So, we normally use, say, 4 buckets or 4 types of personas that we can do. And this is something that you can do multiple ways. You can do this super elaborate to really get a good picture. This is about client interviews, etc. You can go out and talk to them. That takes time. You get super in-depth personas, or super in-depth idea of how people like to interact, how they bought from you. It's super valuable. Can take a lot of time, but super helpful. Another more pragmatic way is per role in the buying committee. It's a bit more pragmatic, is to match job roles and titles, etc. And then match those to, like we just said, your ideal customer profiles. And then you have a really good basis for targeting. nowadays, it's another thing that you could do, and you see people start using that more and more. So when you have an idea of, job roles and titles and, pain points and challenges that these people have, right? Something that I would very much advise to talk to sales to as well, because they talk to clients day in, day out. So they know the pains and the challenges of these people. But also what we see happening is to take that input and then have synthetic personas created by AI. So that's something that you could use as well. It's not as in-depth as really do face-to-face interviews, but it gives you a very good idea going forward. Now, if you combine this with the ICP, so that gives you a very good starting point, right, to effectively start targeting your audience, right? This is really regardless of the channels that you use, but if you know what your ideal picture looks like in terms of companies that you really want to sell to and where you can really have the highest propensity to score these and land these deals, combined with the people that are actually buying from your company, the roles and the personas that are attached to that, it gives you really your foundation for your content, your targeting, etc. So it really gives you a great idea. So now if you want to look, let's have a look at the different personas that we use, or at least the buckets that we normally use when we're engaging with clients to set up this kind of model. So within a buying committee, we have what we call a power sponsor. So that's number one. So this is normally the person or role that funds the project and takes, in the end, the ultimate decision. Right. This is not, and this is a common misunderstanding as well, this is most of the times not the person that your sales would be engaging with directly. This is someone within the company, normally on a C-level or a CEO, a founder, CTO. That really kind of depends on the specific proposition that you're selling. That knows I have a problem somewhere along on the horizon, strategic issue that I have to do something about. So the horizon for these people is fairly long term, and they normally put somebody to work to make sure that this problem gets solved. They go out and look for vendors. Now, a common mistake or a common misunderstanding, and that we see happening quite a lot as well, if one of these people comes on your scope, right? So back to the lead scoring example that I gave, somebody from this company, which is a good fit, a power sponsor, C-level person, somewhere higher up, or head of payments, for example, could be as well. Pops up, people get, okay, they're in market. It could be that they are, but probably over time. Like I said, the horizon of these people is fairly long term. So, these people popping up on your radar will give you an indicator that yes, they are looking at solutions, but probably not right now. So this is one of those people that you want to stimulate interest for and make sure you nurture them over time so that they're well aware of you and your solutions when they do come in market. So that's the role of the power sponsor. Then we have someone called sponsors. They could be in certain sales literature. These can be called champions, etc. But these are the people that get the assignment from the power sponsor to actually start tackling the problem. All right. So these people have a personal or a business interest to help you succeed. So it's their role, or it's their assignment to, let's take the payment solution example again. It's their assignment to find the right vendor for the problem that they have in payments, for example. So it could be a business owner, right, whose horizon could be a little bit more medium term, or they put someone on the job to find these solutions, sometimes called what we sometimes call a hunter. And these hunters, those are indicators that these people that are active right now are very probably part of that 5% that's in market and that's ready and willing to buy your solution at a fairly short time space. Then, super important as well, and often overlooked, especially when it comes to lead generation and content, are users. So in the end of the day, there's people are going to work with the solution that you have. It's not only at a C-level. These are actual people that are going to use. They're going to use your screens, they're going to use your UI, they're going to use your solution on a day-to-day basis. So they will have a definite say in the decision. right? So these people have to know you as well. They have to be familiar with what you do. They have to be familiar with your reputation and everything that you can do, because these people will definitely have a big influence on the decision. Smaller the company, normally the bigger the influence the users have. Something to keep in mind, something that we see gets overlooked quite often. Users in this case could also be developers, but at least people that work with a day-to-day basis with your tools, because there's a fair chance that they need to change their way of working. So we have new tools, new systems, new screens. So they are going to definitely be listened to by the sponsors, power sponsors, when taking that decision to move forward. Then gatekeepers, I think something we all know them, right? So these are people within a buying cycle that definitely cannot say yes, but absolutely can say no. We talk about IT, we talk about compliance, legal, procurement. It's normally that set of people that oftentimes get overlooked as well, and they pop up on the radar normally at the moment when you least expect it and you least want it. So that's at the end of a sales cycle. So you're about to close a deal, and here comes legal, or here comes compliance, with another ton of questions, etc. Something that you could have tackled earlier on the way, also from a marketing perspective, to make sure that they know you, make sure that the content, the needs that they have at the particular time is easy to find, that you guys are easy to buy from. It's super important to keep these people on your scope. All right, so having said that, and I was moving a little bit too fast, having said that, so now we got the idea of the 95-5 rule. So you have to know, we have to cater to pretty much the entire market, but scope out the people that are in market. So that's one. We have to know, okay, we want to do this, if we want to do this properly, so we have to score our leads in the right way to make sure we filter out the right people at the right time. So that's one. And in order to do that, we need to have our ICPs ready. So we have to know, okay, which are the companies that we're actually going after and who can we have least interest to, at least for now, to make sure that we run effective campaigns. That's one. And on top of that, then within our ICPs or within our ideal customers, we at this stage now know our buyer persona. So who are the roles and the people we're actually engaging with? So who are the people that I need to see across my model and in my system that are actually interacting with me and my content, in order to make sure that to gauge, are these guys are going to move, or these people are going to move in market or not, or are they part of the 95%, and do I need to nurture them over time and to make sure that I keep that visibility up with this crowd. Now, given the complexity across all the channels, we certainly really need to put in place a sophisticated model to make sure we tackle that. And that's going to be this. So this looks very complex, and I know, but this is really the modern, if you ask me, the modern marketing model with all the channels that you can use, right? So your digital core, your digital platform in the middle, where you capture all these engagements, these leads, these people, and based on the prep work that you've done with the ICPs, you can actually start lead scoring these people, then move that data along to different channels that you can use, because you want to gauge out, okay, so who are we actually dealing with? Who are the personas that we know? So then we know the companies that we're engaging with, we know the people from those companies that are engaging with my content, with everything that I do on my channel, from my channel perspective. And then we start building what I said, that explicit score. So, are we gauging interest? Do we know the right people, right? On which bucket, which personas are we actually engaging with? Right? And then we can use, again, the different channels, because it looks very linear right now. In reality, people are going to move across my different channels in different ways at different times. So I can start developing these leads over time and move them from contacts to leads to marketing qualified leads, and in the end to sales leads. So it really ties everything together to build this model. So you can connect all your channels, you start measuring the fit of the companies that you're engaging with, you can start determining their interest, right? Are they just browsing, and do I have to keep them warm, say, for future reference, and when they do come in market? Or do I have to move them quicker to sales because I know these people are part of the 5% that is actually in market? So, and you want to make sure that you keep that, what we call lead nurturing, as personal and as, personalized as possible, because you've done the exercise of determining the buyer persona. So, you have an idea of their pain points, their needs, and their challenges, and then you can actually put content in front of them that addresses those pains and those challenges, right? And at the end, our ultimate goal of this is obviously to deliver results, and results in this case will be sales qualified leads to hand them over to sales, right? So that's the 5% that's in market right now. But most importantly, the biggest chunk of the market, so those the 95% that's not in market right now. And this is a model, if you want to put this in place, that runs perfectly well at scale, right? So this is across regions, countries, products, propositions. So once you've done this exercise, you can easily scale up this model, going into new markets, going into new regions, new industries, new products, etc. You can use, and when you've got the basis in place, you can use and reuse this entire model to really grow and scale your business. Referring back to the picture that I showed you earlier. Then, now we've covered a lot today. So, but I really want to boil this down to say 3 key takeaways. If you want to do effective advanced lead generation at scale, right? First thing to do is embrace the 95/5 rule. So really keep that one in mind. 95% of your total addressable market is just not in market right now, but they will come in market, next quarter after that. So make sure you keep your visibility up with those people and not just focus on the ones that are in market right now. Measure, score, super important. And especially when you start scaling, things can grow very large very quickly. So you really want to have the digital tools in place to make sure you're doing the right things to the right people, and you want to get the right answers. So are these people that we're engaging with our content, with our channels, is that a fit? And do I have a gauge, or do I know what the interest is? And do I know what works? Because it also gives you those answers as well. So, and the third takeaway, if you ask me, is really start building, running, and optimizing your digital model. The picture I just showed you really is the idea of that's the system that we use, or setup that we use, and it works really well in our case. But really think about this, especially when you start scaling. If you want to scaling or speeding up, I think you need that digital core, that digital marketing, say, beating harder engine to make sure that you can actually tackle the effect of the 95/5 rule, but also skill and interest, and make sure you get all those companies in your database and actually get value from them.